so this panel is all about corporate venture capital. I think it's a really relevant discussion as well, because just the last year we saw record levels of corporate venture funding in climate tech, and also record levels of acquisitions as well. We saw, I believe, 250 acquisitions. So without further ado, I'll introduce you to the moderator, Andrew Gaule, the CEO of Aimava. So Andrew, over to you. Thank you.
Wait. Nikolai, can you hear me now? Yeah, okay, good, right, my one works. So welcome everybody, my name's Andrew Gaule. I've got the pleasure of chairing this panelette today with some real experts in corporate venturing who are deploying hundreds of millions, billions of dollars into investing in startups. My background's been 24 years plus in how technology is changing business models and that within organizations. But I'd like to hand over to the panel to introduce themselves and to give a brief introduction to what their particular fund on that does. So I'll start at the end with, just to be awkward, Charlotte.
Hi everyone, I'm Dr. Charlotte Kirk from Fortescue Energy. So Fortescue Metals is the fourth biggest iron ore exporter in the world, based in Perth, Australia, but we've got operations globally. Market cap of sort of multi-billion dollars, but what comes with that is a huge amount of emissions. And so Fortescue Energy was set up to decarbonize all of the mining operations. We've set aside $6.2 billion to do that by 2030. And the idea is that given that we have to get good at all those fuels, technologies, products for our own operations, we can sell them to the rest of the world and help them on their decarbonization journey too. So we invest in any technology that drives renewable energy into heavy industry. So that's across power decarbonization, heavy mobility decarbonization, heavy industry, green iron, green steel is clearly a big focus as an iron ore exporter. And so we can invest anything from sort of early stage ventures all the way up to strategic investments for the corporate. So I get to speak to lots of amazing companies for a variety of reasons, and sort of talk to these guys who also have very similar mandates as well. So I will pass along down the line to Hans.
Thank you.
Thank you, Charlotte. Hans Middelthon from Aramco Ventures. We've been going for 12 years, and our focus is to support companies providing low-carbon fuels and to decarbonize our own operations. We're the venture arm of Saudi Aramco. I think most people know them. We're a $2 trillion company based in Saudi Arabia. Our Aramco Ventures operation, we are also global. We're based in the US, in Europe, in China, and obviously in the Middle East. We have $7 billion to invest in ventures, where $1.5 billion is focused on sustainability. We might come back more to the details later, so I think I'll leave it at that.
Great, thanks, Hans. Irina.
Thanks, Hans. Good afternoon, everyone. It's a pleasure to be here. And my name is Irina. I'm coming from ArcelorMittal, which is largest non-Chinese steelmaking company with the largest geographical footprint. Steelmaking is, of course, very carbon intensive. And we've pledged to become carbon neutral by 2050, which is quite challenging. But nevertheless, we are very determined and have a number of technology pathways that we are developing in order to get to net zero and low carbon steelmaking. And in addition to all of the technology pathways and initiatives, we've launched XCarb Innovation Fund, which is in nature a corporate venture capital fund of ArcelorMittal, to invest in the companies with developing technologies that can support our decarbonization journey. So it's really, if you look at the steelmaking value chain, and of course steel industry is very energy intensive. It's starting from energy, hardcore steelmaking, and downstream as well. So that's the focus of the fund.
Good, thank you. And Gina, introduction to yourself and why your model is slightly different maybe to the others on the panel.
Yeah, so I'm the token VC on the panel, I guess. So we started back 24 years ago focusing on climate tech investing, so a little bit first-time fund, first-time team in a sector that didn't exist back then, but finally we're in the right place at the right time. So we manage about over 600 million euros investing in companies globally, early commercialization, and across all climate tech sectors, but of course about 50% of it is energy. What's a little bit different about Emerald is that almost all of our LPs are corporates. So we've got over 50 industrial corporations that are invested in our funds, and they're really looking for a window on technology. Some of them have their own direct investing activities. Some of them have invested in multiple funds. Some of them invested in only our fund. And some of them have actually given us a mandate to manage their fund. So they focus more on the business development, getting to commercial impact with the startups, and basically outsource the investment activities to us.
Yeah, great. Great introduction out there. So you get a feeling from the panel of where they're coming from. We're going to have a QR code up shortly, and I'm going to have questions on that coming from the audience. So we'll be playing some of those questions that's yours. So scan that. You'll be able to go onto Slido and please put your name in. Don't just be anonymous. But just building on your point, Gina, for 20 plus years, I've been helping corporates on how they get into corporate venturing. And I think it's really important that they understand the process. And you coming from a VC background, give them that discipline, and they can manage the funds and all that as they go along. I'd like to sort of go back to the corporate venture units and really ask about how does their process work. Caricaturing it, do you come as, I'm a big corporate, of course you want to take our money, or are you investing like VCs? Well, what's the process that you go through in terms of your investment? So we'll start with you, Irina, as you've got the magic mic.
Of course, a great question. And I think the answer to it depends on the stage. And if you look at some of the early stage ventures, especially backed by Silicon Valley guys, they quite often not necessarily welcoming the corporates very early. And when they do want to get a couple of corporates to come so that there is no sort of, no competition. Well, there is competition. So it's not just kind of one strategic with the strategic rights. Of course, from my perspective, we are focused on the investments from the strategic angle. So it's really around, can we invest in the technology that we can potentially deploy in our operations, so we can work with this technology in order to accelerate our decarbonization efforts. So there is this angle, and that's the reason, quite often most of those startups would want us to come and would welcome us because they need this platform that we provide to scale them up and to prove the technological viability and scalability as well.
And Hans, how does it work when you've got to deploy $7 billion? How does your process work of investing in startups or investing alongside funds?
It's a challenge. It's a lot of cash. But my background is also financial, actually. I had 10 years in a company called 3i, and I've seen both. I think where we differ from a pure financial VC is that we look at financial return, which is still a key metric, but we also look at our strategic return for our operation. So what we do for the customer or for the early stage company is to bring the customer to them, and that obviously has a benefit for the startup company, but also it should have for Aramco. We will only invest, certainly in the sustainability space, in companies that have strategic relevance to Aramco's operations, i.e. there must be a link with what we're doing today or what we're planning to do in the future. And therefore we look at, it needs to be a strong financial case, but it should also be on top of that a strategic value. And that should play both ways. So in that sense, we feel we add value also to these early stage companies.
Great. And Charlotte, yeah?
Yeah, I think that it depends on the stage. So early stage, there is a big size disconnect between a startup that might have 3 or 4 people and Fortescue sort of 20,000 people. And so then a startup's USP is their innovation and their ability to innovate and be nimble. And so it's easier sort of for them if we follow on early stage and sort of just show up as a strategic, but play the role of a financial. And yes, it's great to have sort of brand recognition on the cap table, but really the benefit a strategic brings at that case is less of the deployment potential in operations. It's more of help with, you need the safety protocols to get on the site of a subcontractor. Well, we just have someone who does that full time. We can help with that sort of behind the scenes type of stuff. When it comes to larger scale deals, then we might sort of could lead, or we've co-led deals before, but sort of there has to be a degree of strategic alignment. Not necessarily, we don't need business unit buy-in per se, but if you could see the technology in our business in 5 years' time, then it's sort of in scope for us.
So Charlotte, there's been a few questions come through on Slido in terms of saying, what's the sustainability or philanthropic or business sort of objective of doing it, or getting an IRR? What's that balance between the sustainability side, or you're just going to get a financial return? What's your view on that before we come to the VC?
I mean, we are ASX listed, so we do need to make financial returns. But the idea of sort of venture capital is to sort of be that eyes and ears on future innovation. So the idea is sort of to place a few bets and sort of learn about these perhaps peripheral markets, adjacent sectors, so that if in a few years' time we want to get into that, so if we know the sector, we know the people, we know the players, which companies we want to get in. Fortescue has its own philanthropic arm that does investments for that reason. So we wouldn't do it for that. For us, it is strategically aligned but financially driven, I would say.
Okay, and is that the same for Hans and Irina?
Yeah, I think it's very similar. I think we are willing to take bigger bets, more risk, potentially higher reward. And there are certain core areas within our operations very much centered around carbon, low carbon fuels and those kind of things, where we have a longer term view, I think, than a financial investor. We're willing to look at taking bigger tickets over time and also take bigger risk. But I think we understand those areas often better than financial investors, to be honest.
Okay, but Gina, maybe come to you as the...
Just maybe it's very, very similar, but again, of course, we do want to have financial return, but primarily the objective is strategic. Is to the extent the underlying technology can, support us and we can really use the technology, and it's potentially disruptive or game-changing for us to get to net zero.
And Gina, maybe is your view slightly different because you're a VC, which you've got LP money in and you've got to make a financial return? Or how do you balance these strategic and
sustainability in climate tech defines our strategy. So those are the areas that we invest in. So if it isn't climate tech related, we're probably, it's probably outside of our strategy. But we're a financial investor. So yes, we're, for us, our primary metric is financial return. That being said, if our corporate LPs don't get some strategic value out of it, they will see the relationship as a failure. Right? So we could deliver fantastic returns, but that's not the primary reason why they're investing in our fund. They're investing because they want access to those startups that we review thousands every year, right? So that's really, I think, very similar to the others on the panel. They're really looking for a commercial relevance to their business.
And I suppose building on that, there's a question here from Nick Allen about what are the 3 most important capabilities you're looking for in this decarbonisation sort of type sector. What are you looking for in that? Is it billions of tons of carbon saved, or is it what's the sort of metric that you're using to know there is a carbon saving or a sustainable?
Right. So our fund does not have to do carbon reporting, right? So we also invest in the water sector. We invest in sustainable packaging. So we do invest in other climate tech related areas that have, but no carbon metric to it. So we've not committed to a specific carbon metric, right? So we have, lots of specialists within our team. They know what state of the art is. Everything has to have a positive climate impact. Depending on what it is, we'll measure it differently. But if I look at the characteristics, it's, in the end of the day, what is going to make a successful company? Because only those companies that are successful in deploying their technologies have a chance of making an impact. Right? It doesn't help to have a theoretical impact because they have no revenues, because they haven't figured out what their business model is. Actually, in the end, they have zero impact, right? So it's really it's the typical, very strong value proposition, large market opportunity, a team that can, that we believe can execute, and then obviously we need to have, attractive financial metrics around that, getting into the deal and also getting out.
So going back to the panel in terms of how you're assessing these things from a green perspective and how you see that they're going to be strategic and make a change within your organization. Have you got some examples? So bring it to life with a particular example.
Yes, I think in our case, it is actually a measurement of CO2 emissions reduction, because we know that in the current blast furnace pathway, there is close to 2 million ton of CO2 emitted per 1 ton of steel produced. So to the extent we can measure this reduction by using different technologies in the process, can we reduce it? So this is very much, one of the key metrics, not the only one, but, that's the CO2 reduction is definitely something we are quite focused on.
Yeah, and from our side in Aramco Ventures, we're here to support Aramco's overall strategy within this area. And we have two focus areas, low carbon fuels. So we're looking a lot at hydrogen, ammonia, SAF, carbon capture and those kind of things. And this is Aramco's core product. So we need to do whatever we can to decarbonize it. We're also obviously looking to decarbonize Aramco's operations. That's our second program. And that's focused on Scope 1 and Scope 2, and Aramco has a stated objective of net zero Scope 1 and 2 in 2050. So we have a number of initiatives going on there and a number of investments.
Just build on that. Have you got examples then of where Aramco has bought the product, bought the service alongside the investment? Sort of what comes first?
I would say in low carbon fuels, it's a challenge. And we've spoken about this many times. That ecosystem is not fully developed yet. So we are investing in the future in a way. If you're looking at more digital solutions, you can implement them tomorrow. But if you're looking at hydrogen, ammonia, carbon capture, etc., that is more the strategy we're all heading towards. But we're trying to build the value chains, to build the ecosystem. So in terms of we are doing pilots and things, but we can't roll anything out yet because everything on each side in the value chain is still missing.
Right.
And therefore, corporate venturing together with financial venturing is going to be extremely important in getting over this hurdle, getting prices down, make it profitable, finding the right business models. And Gina and I have been around for a long time. We've seen this. This is my third cycle, I think. But this one I believe in, but still, it's not solved yet, and we need patient capital to get through it.
Yeah. And Charlotte, have you got examples of where you're deploying technologies or solutions in that value chain into your businesses?
Yeah, so I sort of bucket our investments into two pathways. So there's decarbonization, so anything that sort of, we set a target of zero Scope 1 and Scope 2 emissions across our terrestrial operations by 2030. So that's sort of hard potentially for some of these seed companies today to be part of, given 2030 is so soon. But then there's growth opportunities. So that's kind of more of the low carbon fuels. So we have a global portfolio of hydrogen-based production projects, to produce hydrogen, ammonia, potentially even SAF. So that kind of brings in direct air capture. And those are growth opportunities for us, to sell green fuels, green products to other people on their journey. So, yeah.
Okay. And, go on, Irina.
No, I just liked what Hans was saying about ecosystem, and I think one more point on measurement, and I think this is not as tangible to measure, but it's really about innovation culture in the corporate. And I think with the corporate venture capital, you open this window to the outside innovation. There is obviously a lot going on in our technological team and the research and development teams, and there is a lot of, fantastic initiatives how we're going to get to net zero. But I think, opening up and bringing this innovation spirit. And yesterday we all heard the discussion around the importance of the growth mindset. And I've seen with that, again, very difficult to measure tangibly. But I think, having this innovation culture, being open and, being future-proof and really looking, it's like what's the future holds for us, how we can, innovate both inside the company, but also tapping into the innovation ecosystem outside.
Certainly, an analogy I've written about in the past is that your scout bees, you've got this beehive of your massive organizations where they go in the day-to-day stuff, and you are the scout bees out there who are looking for new technologies, looking for new business models, and you're coming back to your organization and saying some flowers are going out of flower and heather's coming in and we've got to move. So I'm imagining you coming back and doing the waggle dance as the bees do when they go to the beehive,
Comparison.
and listening for the queen bee or the king bee to say, all right, we now need to move the beehive from fossil fuels to green energy or whatever like that. So when you go out scouting, where are you getting your ideas from? Where are you getting your deal flow from? Who are you sort of partnering and that with? Gina, you've got your 50 LP corporates and that in your group?
Yeah, so we receive about 3,000 business plans a year. Let's say 2,000 of them are worthy of reading the deck. And of those 2,000, I would say about a third of them are proactively sourced from my team. I've got over 50 people in my team. A lot of sector specialists, so people who are really deep into the various technologies and who've been doing this for many years. So that's a third where we are proactively scouting. A third actually comes through our LPs and other people that we know, other funds that we work with. So let's say through people that we know well within our network. And about a third of them come directly from the companies themselves. So we've been around for a long time. If people will Google clean tech venture capital, I'm sure they'll stumble across us some point in time. And so, yeah, we've obviously over the years built up quite a machine as far as reviewing deals as well and putting that in a format that is then valuable to our LPs without violating confidentiality.
And out of those 2,000 to 3,000 things that you see, how many do you actually invest in? What's that?
Yeah, last year we invested in 14. 1-4. And this year will probably be somewhere between 15 and 20 companies.
And that's
right?
across all the funds, or is that?
That's across all the funds. But it doesn't mean that those other companies aren't good, right? They could be exactly perfect match for one of our corporate LPs. It's just that we think it's too early, too late, too expensive, too whatever, right?
Yeah.
So there's a lot of reasons why we may not be interested in investing, but we do have an interest in helping that startup to match with one of our corporate LPs. And maybe they'll invest directly, or even better, maybe they'll give them a purchase order, right?
Right, yeah. Having revenue and a purchase order is much better.
Then money will come. Exactly.
Yeah,
Sales solves everything.
Yeah. So, Irina, how do the numbers and metrics work for you, and who do you partner with?
I think probably very similar percentage. I think since we launched close to 3 years ago, we've established the name. So I think people in the industry know that whenever there is some innovation relevant to the steel industry, it does get, it's been sent to us. So we receive a lot of offers on a daily basis. Probably, some of them, I think similar percentage, like 30% would come directly, 30%, being scouted, and thereabout, the rest will come from potential co-investors or other funds who are, present in the space.
Okay. Hans, how are you seeing your deals?
Yeah, no, similar. I think the thing for us is that we started 12 years ago, and we started as an oil and gas technology fund. And we have completely changed. We're not doing that at all anymore. We've also grown a lot, but it means that the approach we've taken had to change as well. We were based in Aberdeen. We looked at oil and gas technologies from Scotland and Norway. That's not the place to be for sustainability or digital and so on. So we're now based in London, covering Europe from here. The interesting thing that's happened as well from an Aramco perspective is that the Aramco organization, we have about 70,000 people, pretty much all based in Saudi, have learned about what we do. And Aramco wants to be a leading technology company. We've set up something called Aramco Digital, etc., etc. So actually, what we benefit from is that the mother organization is out scouting and looked as well. Now they know about us. They feed us very good deal flow. So we get, compared to a standard VC fund, we actually get a lot from our own technical experts who've done a lot of diligence and compared and so on. Yep. So it's quite a good angle.
And they're quite engaged in that with you then, which is that important relationship, isn't it?
Yeah.
The venture unit being close to the, because that's where the exchange of information and strategic insights are going to come from. Charlotte,
Yeah, I think it's similar to sort of Hans and what Irina just said. I mean, I certainly treat a lot of our teams like LPs, and so, go and talk to our decarb team and understand what are their challenges today, what are they trying to work out, so I can then go find startups in startup land that could help them, but equally listen to the innovation that is happening in the external world and sort of feed that back to, Perth, where it's sort of further from Europe. So it's that sort of bi-directional approach that's really good. But I think the other thing in terms of, if you're speaking to financially driven VCs who are purely financial, they do all this DD and do all this work because they have to develop these returns for their LPs. And so if you really want to understand and sort of nerd out about the different pathways and the efficiencies and all of that, I have found that it is in the VC lens and VC sector that's where sort of that really high level analysis happens, in a way that strategics in a corporate, you're not so financially driven, and so that analysis is just done through a different lens. So it's a lot of information gathering, sort of discussing with co-investors, a lot of stuff.
Okay, we've got another question, which is a bit of a sort of different. How do you integrate nature-based solutions into your decarbonisation? It was particularly aimed at you, Irina, but I'm happy for the others and that to do it, because we've talked about, how it fits in your current business processes, but are you looking at offsetting type things or, and nature-based solutions?
Excellent question, thank you. Well, first of all, from the fund perspective, we are focused on fundamental investments, so investing in technologies to really fundamentally decarbonize the value chain. But I appreciate it's a challenge, also just given the chemistry of steelmaking process, that you will always have some residual CO2 remaining regardless of whichever technology you will apply, at least technologies that we know. I'll give you an example. So if you use DRI based on hydrogen, so directly reduced iron based on hydrogen, you can minimize your carbon footprint, but nevertheless, based on the known technologies, you will still have a couple of 100 kilograms of CO2 per ton of steel produced. So the reason I'm saying that is that if we really want to get to net zero, this remaining CO2, we need to find a way to offset or to address. And this is where I think nature-based solutions, the tech-based solution will play a role. We as a fund did not invest in any nature-based solutions yet, but this is something we are trying to, formulate the overall strategy, how will we address it, and then see what makes sense from the investment perspective. But as such, at this stage, we are really focused on the direct investments and the fundamental technologies, because this is where also we can bring the most value.
Mm-hmm. Hans?
Yeah, I think you asked for an example earlier on. I think we can talk about one here, which is looking very promising. Aramco is looking to plant 650 million mangroves, which is a huge project, 350 million in Saudi and 300 million out of Kingdom. In doing that, obviously, you need access to all sorts of capabilities. And we've very recently invested in a highly promising company called Dendra, based out of Oxford here in the UK. And Dendra focuses on restoration of mining areas and all that sort of stuff. But for us, what Dendra will do is help us, first of all, seed the 650 million or whatever the number might be, and then monitor the growth. And Dendra is based, the organization has a lot of ecologists, environmental scientists, and data scientists. So they have a platform where they monitor biodiversity, etc., and that will be a key element. They're talking closely with our various business units in this space. So that's something we're working on.
Okay, I'll pass it on, but Charlotte, I'm going to give you a more difficult question that's come from the audience, just to be sort of fair, and it's got the most of the votes on that. Is it appropriate for you as heavy industries to be doing these sort of things? You've talked about your decarbonisation sort of offsetting sort of type thing. So how do you defend Aramco, BP was mentioned on that in here, claiming to be innovation zero?
So firstly, Fortescue is all about real zero. We actually don't believe in offsets because we believe it permits the ton of CO2 elsewhere. So our 2030 target is real zero across our Scope 1 and Scope 2 operations. That means no fossil fuels and no offsets. So yes, that is a challenge, but one that if you've ever met Andrew Forrest, we will rise to. And so that is why we are so heavily invested in the whole energy transition, both to decarbonize our own operations, but to sort of seed and scale the industry alongside, as we talked about ecosystems earlier. And it's so important to bring everyone on the journey with us. There's a lot of synergies between all of our businesses in terms of heavy industry, and we are the most polluting sectors. And if we can decarbonize, then it sort of means that everyone else has no reason not to. And a mining sector is sort of hard to relate to. My PhD was in hydrogen ammonia. I didn't really know about iron ore mining before, but it's really relatable when you break it down. It's power decarbonization. It's heavy mobility. It's just that our trucks are massive and funky looking. It's heavy industry. It's using hydrogen as a fuel, ammonia as a fuel, SAF, produced from green hydrogen. When you break down all these components, it's really all the startups that we all know and sort of interact with, just applied in a slightly different way.
Yeah. And I suppose my perspective of being involved in this for years, and the reason I'm passionate about corporate venturing is it's fine having a startup, it's fine having a bit of technology, but it's how do we deploy that? And until we get the larger businesses, which we're all consuming in our vehicles and in our lifestyles, until we can get these types of organizations to change, we're not going to get it from the individual organization. Is that fair view, Hans?
Yeah, no, I agree. But I also find this kind of question a bit bizarre. I mean, should we not invest? What's the alternative? So we've set off $1.5 billion just in our one fund to help the energy transition. I don't understand the argument. Is that a bad thing?
Yeah. You can pick it up with the audience.
Yeah, I'm happy to discuss it afterwards. Yeah. Clearly, I think within our organization, within the 70,000, we have people, if we talk about hydrogen, ammonia, etc., coming from the oil and gas side, very easy to transfer over to these new areas. So if you take away the skill set from the oil and gas operating companies, I think you're making a big mistake.
Yeah.
And we will also be customers for many of the startups. And we have, as people know, deep pockets. So why remove that? I don't know.
Fair responses, good?
Yeah, and I think I'm completely with Hans. I mean, how else, right? Like, how else are we going to decarbonize if the polluting industry are not going to transform? And I think, we all talk about energy transition. And if you think about steel is going to be, again, so paramountly essential and critical for energy transition, because you will need it for all of the renewable energy, be it solar, be it wind towers and solar panels and nuclear plants, and you need it for electrical vehicles and for low carbon infrastructure. So we need to get steel, we need to decarbonize the steel sector to really support the energy transition. So it's really, I also think it's not a difficult question. It's, how else are you really going to get to net zero unless you get the polluters to decarbonize?
Gina, you got a perspective?
Yeah, I was just going to say, right, whether the corporates actually invest or not is almost for me secondary. What's more important is that they find these startups and they start engaging with the startup and they sign purchase orders. Because without that, we're not investing in the sector either.
Right. Yeah.
Right. Then nobody's investing in the sector. Right. So it's, I get it that they like to make sometimes investments together with the strategic relationships and stuff. But without that, the sector doesn't exist, right? So when we started 20 years ago, corporate venturing, as you know, was almost unheard of in this whole sector,
Intel was
right?
doing it,
Yeah, it was just a few big, the IT guys, there were a couple of them. But the sector needed to be built up from the ground up. And today, in every single investment we make, I would say there's at least one corporate there, right?
Yeah. Good. I'm going to be winding it up shortly. Is there one more point you want to give, Charlotte?
Yeah, I was just going to say that sort of, a good startup, it's not too hard to raise money. But what I certainly get excited about is finding a startup that has deployment potential in our operations. For example, high temperature heat is something that will be needed in many of our applications. And so you can go and talk to all these amazing startups. And you could give them some money and that's great. But, helping them to find sales, to find deployment potential is actually then having an abatement potential and having meaningfully drive the energy transition, which giving money, yes, is a step on the way, but sort of being a corporate customer a bit through the sort of eyes of corporate venture capital is sort of what I find exciting.
Great. I've got one last sort of question to ask you. I think you've given a fantastic overview now of how corporate venturing works, how you're deploying, which sectors that you're deploying into, and importantly, you being customers. for a startup and investment, it's the exit. Of course, that's what you got to work to. So, do you as corporates purchase? Are you in the line of business that once you've invested in something, you're going to be acquiring it? What's your view on that? Because sometimes that's the perception of what corporate venture or corporates and that do. They're going to be the acquirer. What's your perspective?
So we wouldn't invest in a company with the idea to definitely acquire them. We are driven by financial returns, so we want sort of an exit by whatever exit means that is, IPO, M&A by someone else. But we are strategically aligned, so there is a potential in the future, but it's not a requisite of an investment for us.
Right. Hans, your perspective?
Yeah, no, we're the same. I think we made about 100 investments, not acquired a single one. I don't think we'll do it for the next 100 either. So it's all, we are very financially oriented in that place. We want these companies to grow, bring their products to market and help them with all of that.
Yeah,
so
we want them to exit and that in the end.
Yeah, we'll exit.
Good. Irina?
Yes, very similar. No kind of M&A objective when we invest in the startups.
And from a financial VC fund sort of perspective, on where are you looking for your exits?
Well, some of our LPs have actually purchased our portfolio companies, right? It depends. Some of our LPs are actually looking to apply the technology to their own operational activities to reduce their environmental footprint. Others are actually looking to expand into new businesses. They're technology providers, so it's logical that they may very well purchase one of our portfolio companies, but then they have to participate in an auction process and bid the highest.
You want to get the best price.
Well, exactly.
It's your queen bee dancing music.
Is that green? Well, thank you very much to our panel. If you could join me and give their great insight.